Now, moving on, Fintech startup Niro bagged $11 million in a mix of equity and debt from a clutch of investors, while the equity capital raised in Series A round came in from Eleva Equity, GMO Venture Partners, Rebright Partners, and Mitsui Sumitomo Insurance VC, among others. The debt capital was funded by Innovent Capital. Niro, founded in 2021 by Aditya Kumar and Sankalp Mathur, enables e-commerce platforms to give credit to their consumers. Joining us now to discuss the fundraise and the company's growth blueprint is Aditya Kumar, the co-founder and CEO of Niro. Aditya, thank you so much for joining us on Startup Street today. Yours is an embedded lending platform that enables consumer internet platforms build credit products for their customers. So talk to us about what you have on offer, and you also claim to be driving significant revenue growth in the process for your consumers.
Thanks a lot for having me. That's exactly what we do. Niro is an embedded lending startup. We work with consumer internet platforms to help leverage three things that they have, three primary assets, which are data, distribution, and engagement, to drive value for, engagement with, and ultimately revenue for the platform and its end users. We launched about 15 months ago. We work with platforms like Quicker, Snapdeal, Housing, and several others, and enable those platforms to leverage the data, distribution, and engagement that they have with their end consumers to deliver frictionless and competitive products for their consumers, driving material revenue growth for these platforms themselves.
All right. You've raised $11 million that you want to use to expand products and tech capabilities, in addition to making investments in risk capabilities. So give us a sense of what we can expect in the next year. What's the fund allocation plan?
So in the last 15 months since launch, Niro has grown from zero to almost 300 crores in assets under management, 60 crores of monthly originations, and a $4 million annualized revenue run rate. The plans over the next year, especially keeping this fundraise in mind, are to double down on the capabilities that we've already built across product, risk, analytics, and technology. What this entails is an expansion on both sides of our ecosystem, where we will work with a significantly larger number of consumer internet platforms, offering a significantly larger number of products to their end consumers, as well as a larger number of lending partners.
All right. And, as you mentioned a little earlier, your clients include those of like Snapdeal, Quicker, Housing.com, and other consumer companies. And you've disbursed about 300 crore rupees of loans in over 200 cities. So talk to us about the average consumer who needs to access this funding.
So it's a reasonably wide spectrum. These are customers typically across the income spectrum, across the credit spectrum, right from customers who have thin or very, very, very few, very limited credit histories, all the way up to consumers that could be, reasonably affluent that are present on these platforms. The primary focus for us is consumers that are digitally active and therefore present on one of these multiple consumer internet platforms that are located in over 14,000 pin codes in India. 2/3 of our customers are salaried, 1/3 are self-employed. And as I said, they come from a very, very wide range when it comes to the entire credit spectrum, as well as the income spectrum.
All right. And let's talk about numbers then. Talk to us about your revenues. Where do you hope to end this year? What about NPAs, and when do you hope to turn profitable?
So again, contextualizing the fact that we launched 15 months ago,
right.
in April, we hit a $4 million revenue run rate, which we're obviously extremely proud of. Over the next year, this number should close to treble, which means go to close to 11 to 12 million US dollars in annualized revenue run rate. We currently originate about 60 crore rupees a month. Over the course of the next year, the idea is to take this to 120 to 150 crores a month. And given the relatively unique nature of the business, where we are able to leverage the data and the distribution that our consumer internet platforms have, through pre-selection, we're actually able to attract a reasonably prime customer from a credit point of view. And what that means is, on cumulative 300 crores plus of disbursement till date, our NPAs are sub 0.5%.
All right, so NPA is sub 0.5%. Now, the fintech landscape in India is highly competitive. You compete with the likes of Lentra, UB, and Avanti. So how do you stay ahead of competition at this point?
So I think competition is relative, right? Competition is defined by the size of the market, as well as the amount of players that are in that market, and especially the prominent players that are scaling, creating value for participants in that ecosystem. Relatively speaking, India still, from a competitiveness point of view, I would say at a relatively nascent stage. The Indian fintech ecosystem at large has a large number of players that are going after a very, very small market. That market is your high-income, salaried individual that works for the top 100,000 corporates in India, right? And that's where you're starting to see a little bit of margin compression, a little bit of cost pressure and things like that. But on average, and especially given what's happening at a macroeconomic level for India, income explosion, demographic dividends, etc., over the course of the next 10 years, I think there is room for many, many more such companies to actually come into both this and across the entire ecosystem. So I think lots of room to grow. There are obviously many things that we at Niro do, especially in terms of having talent density within our team to ensure that our execution capabilities are absolutely top notch. The kind of partnerships that we build with our demand side partners, which are largely exclusive, as well as the deep relationships that we have on the supply side with our lending partners. But massive market, lots of room for many more players. Obviously, the aim is through top-notch execution capabilities to stay ahead of the curve.
Right, so lots of room for growth there. And the banking lending software is an area where innovation has not sort of kept up pace with the market evolution. So how are you able to democratize credit access, and what is the kind of potential you see in the space?
So a lot of this for us comes down to ultimately not just a simple one-dimensional software play, right? Unlike a lot of our peers in this space, many of whom you mentioned, Niro actually is a full stack solution. So we don't just provide infrastructure for a platform, for a platform to be able to connect to a bank and say, here you go, here's the pipe, build, why don't you start distributing credit products? We actually do everything from product design, the entire technology build, working with the platform to leverage the power of the data that they have on their end consumers, as well as with working on the supply side to actually get lenders comfortable with originating credit products to consumers, which are both competitive and frictionless. So I think it goes significantly beyond, right? Our business model, the way it's designed, goes significantly beyond just the provision of sort of infrastructure, and is by nature a lot, and by design, a lot more full stack.
All right, Aditya, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you for having me.
All right, on that note, we're going to take a short break, but don't go anywhere, because coming up, several Indian startup founders have raised their voice against Internet and Mobile Association of India. We'll tell you exactly why on the other side of this break. Thanks very much for taking us through that story. Now moving on, India's B2B e-commerce marketplace is expected to surpass sales of $125 billion by 2027. This according to a report by investment banking firm Avendus Capital. It expects 6 to 7 of these marketplaces to go public in the next 5 years. About $5.3 billion has been raised collectively in this sector so far in the last 5 years. But the report says that this is now at an inflection point in India and will likely have about 20 unicorns come 2027. So joining me now to discuss the highlights of this interesting report is Varun Gupta, the MD of Digital and Tech Investment Banking at Avendus Capital. Varun, thanks very much for your time here on CNBC-TV18. Let's start with a big headline from the report: $125 billion of GMV opportunity in the next few years and 20 unicorns in the making. What are the key growth drivers, if you could summarize for our viewers?
Ritu, thank you for having me on the show. I think you actually summarized it pretty well. We as a house, we are extremely bullish on the opportunity which sort of is in front of us in the B2B commerce space or the B2B marketplace space. Right? When you look at the tech ecosystem, the underlying market for B2B is far larger than any other segment. So, for example, in B2B, you're expecting a $2 trillion underlying market, which is more than 2x of what you potentially see in consumer side, for example, right? So I think the big opportunities which are driving growth in this area, the fact that our supply chains are extremely broken, right? You have a multiple layers of intermediaries, whether you look at the manufacturing side of the supply chain or the distribution of finished goods or produced commodities from manufacturers to retail. There are multiple levels of distributors who are playing a small role in terms of moving goods from point A to point B or just providing working capital credit. So that's one big challenge,
sure.
Which the B2B commerce players are solving. And then also, in India, the unique thing is the SMEs are pretty large, whether you see the manufacturing side or the distribution to retail side. And many of these B2B e-commerce companies are actually empowering these SMEs to become more efficient. And just one important data point to look at is even in countries like US and China, which are far more organized, even in those countries, the B2B marketplaces are about 20% of the supply, while in India it's just 1%. So there's a significant opportunity lying ahead of us in terms of just driving this penetration up.
But this tech penetration for this $2 trillion opportunity you spoke of, currently it's less than 1%, so naturally there is headroom to grow, and therefore the numbers that you were stating. But even by 2027, it's only going all the way to 5%. Is that going to unlock the $125 billion you're talking about?
Yeah, so I completely agree with you. I think even if you sort of move and the penetration increases to just 5%, it's a $125 billion market, but it's a gradual process. It takes time to sort of for the supply chains to evolve. So therefore, even after 2027, you will probably see many of these B2B companies or B2B marketplaces will continue to clock very good growth rates, which are at least north of 50%.
Even this $5.3 billion, which has been invested so far in the B2B marketplace segment, a bulk of it has only just come in the last couple of years. Now with, the macro environment sort of changing, and, this is across companies, not just B2B marketplaces, what kind of investment momentum will continue going forward? And are there subsectors within this that are seeing more activity than others?
So I would say, I think like you mentioned at the early part of the discussion, right? So B2B is at an inflection point. It was in 2020, some of the key tailwinds actually came into place together. So we had COVID on one hand, which significantly disrupted the traditional supply chains. Then you had GST and demonetization and also UPI, which was actually leading to formalization of the economy. So that has led to significant growth in numbers. So therefore, you see most B2B marketplaces or the category leaders have grown anywhere in that 7 to 10x in the last 3 years. And even in terms of funding, right, 70 to 75% of the funding has happened in the last couple of years. We see that this growth momentum will continue over the next 5 to 6 years. We believe that there will be, the B2B marketplaces, which are about 20 billion today, will grow to about 125 billion, which is about 5x growth. And in order to achieve these growth, while many of these platforms have actually already become profitable, most category leaders have already become profitable pretty early in their journey, but they will still need to raise capital in order to fund the growth. Whether it's working capital, some of these companies are looking at mergers and acquisitions pretty actively. So therefore, capital will be needed, and investor interest is also pretty strong.
Okay, we'll see how that interest plays out. But, how does India stand in terms of investor interest compared to the rest of the world? For instance, your report highlighted that about $5 billion or so came in the last few years to India versus $26 billion globally. Will India continue to have this disproportionate share of investor interest? Or do you think now investors are getting more cautious looking at, sort of making investments closer home, and that might affect investments in India?
So I'll break this into two parts, right? One is, in the B2B space, you will find that many of the companies which have also raised capital in the last 3 years have also been India first models. So unlike US and China, you will see there is a stronger interest in B2B models in India because our supply chains are far more broken than what you see globally. So therefore, India will, in our view, continue to get a disproportionate share in terms of investments in the B2B space.
All right. And I noticed you said about 6 to 7 B2B marketplaces are expected to make their public debut, IPO, in the next couple of years. Any names you could share with us?
So I'll probably avoid sharing names. We already have one listed player, which is IndiaMart, right? There are about 7 unicorns in the country. And of that, I would say that in our view, at least 3, 4 are very strongly positioned to do an IPO in the next 2.5 years. And you're also seeing the next layer of companies, which are also close to getting that unicorn status whenever they go for the next round of funding. Most of these businesses are profitable. The cash flows are actually pretty solid. The only investments they're making is, like I mentioned to you earlier, towards working capital. And all of these companies are well positioned to sort of do an IPO as also the capital market opens up.
Varun, we're running out of time. So quickly, we've heard your projections, but what about the tailwinds to the sector? What are the downside risks to this projection that you've made?
So we believe I think I've sort of I'll end up repeating some of the tailwinds. I think COVID, demonetization and UPI, which led to formalization of the economy, which was one big impediment. Because if you have a cash economy, then you don't prefer formal channels like a B2B marketplace. So that impediment has been significantly solved once that happened. And the disruption to traditional supply chains in COVID, which meant that people were sort of a lot more open to working with B2B marketplaces, right? And then the overall push from, or globally, people looking at sort of de-risking their supply chains from China. Now, India has its own natural advantage because of cost, because of labor. So many of these B2B marketplaces have actually been actively involved in exporting either from India or sometimes even exporting from some of the emerging markets from India to the globe. So I think I would say these three big tailwinds can potentially drive significant growth over the next 3 to 5 years. From a one of the areas which some of these companies actually need to sort of focus on in order to ensure that these projections are met. Margins are extremely important.
Yeah.
Many of these companies have used tech in a very interesting way. They've used tech as a strong enabler, but maybe they need to sort of start figuring out if they can use tech even more strongly to drive some of their efficiencies in the margin structures.
Well, that could be true of most of the sectors today, but Varun, you've given us plenty to think about. Thank you very much for your time here on CNBC-TV18.
Thank you, Ritu.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.